What's going on with you guys? It's Tickers here, back with another video. Hit that like button, hit that subscribe button for me, guys. For today, man, we're going to have to talk about how spicy this week is going to be, guys. It's going to be so spicy. We got a Fed meeting tomorrow and Wednesday. We got all the big tech earnings coming up this week, and we're going to go into all of it here later in this video. So hit that subscribe button, guys, so you can stay up to date on the news and stuff around here. And without any further ado, guys, we're going to start by watching the video. Stocks open lower as earnings come into focus. So let's check it out.
After a down pre-market, let's get to Bob Bassani. Morning, Bob.
Yeah, we're off the low, still down 16%. A little bit of a risk-off day. You take a look, what's risk-off? You want to look at ARC. You want to look at semiconductors. You want to look at metals and mining. Those are the three classic risk-on, and they're all down today. And defensive stuff, healthcare, Merck, Humana's up, Procter's up, and the consumer staples.
So what does this show me? This shows me that there's actually some fear around growth stocks. And like he just mentioned, they've been on a heater the past couple of weeks, guys. Growth stocks have just been running and running. Excuse me. And they've just been running and running. And here you go. You're starting to see healthcare and staples, the more, laid back defensive plays are starting to rally a little bit. It's not a good sign whenever you see, in my opinion, see stocks just going crazy and crazy just ahead of earnings. And then all of a sudden they're starting to taper off a little bit, like, maybe we need to chill out a little bit. Yeah, that's not a good sign.
Why are we down? Well, the data out of Europe wasn't great. The Spanish CPI was a little higher than expected. But overall, look, it's going to be a tough setup here. We've had a big move up. The Fed is not going to come out and say, we've declared victory against inflation. They're going to say there's a lot of work to be done. And they don't want the market to think they're going to be cutting rates at the end of the year. They're going to throw more water on that. It's a little bit of a tough setup. Then you just see what Jim was talking about, these huge advances in tech stocks that we've seen this year. I mean, Google's
massive
up
runs,
11
dude.
or 12%. Nvidia's up like 35%.
But look at them on today, though. They're all down almost 1-2% for some of them. Nvidia, especially. Nvidia finally broke the 200. I was excited about that. Apple, like it was, Alphabet, Google, it's looking like it's getting close to 100 again. Psychological levels, guys. If the market's really not feeling the psychology of it, they're not going to pump the stocks no more. And it's weird how they just all run back up to these psychological levels. And if we were in a real just bull run, these stocks would just be breaking through those and just keep right on going, guys. So keep that in mind. Like if it was a real actual bull market we were in, these stocks would just keep right on going past those psychologicals. Because most people want to get in at those levels, really. Like, oh, I can get them for 200 or 100 or even less than like it is right now. Yeah. Oh, yeah. Get in there before it goes away from you. You know what I'm saying?
On the year. AMD has been up huge on the month. It's up a big amount, some 13-14%. So there's a lot of little room here to breathe for the next few days. The important thing is the trend, though. We keep drawing these trend lines, and I hope you've all gotten the message here. Basically, last week, the middle of last week, we broke through that long-term downtrend that started with the highs in January of last year and lower lows, lower highs. That's what a downtrend is, and we're breaking through that. And yes, technical analysis matters in this, no matter what you think about it. People are pointing that out. Look at the strong start. What you want to look for is, are more stocks advancing than declining? That's the sign of a stronger market. The S&P is up about 6%. The advanced decline line for the NYSE is the highest since going back to September. That means a lot more stocks are advancing. 66% of the S&P 500 is above its 200-day moving average, which you wonder, is that a little, a lot? Above 50 is good. Above 60% is really good. Above 70% above the 200-day moving average. Well, that's arguably, you're getting into bull market territory.
Yeah, so this is what I was basically talking about. Like, all these stocks are just going up crazy. And look at the advance to decline. It's been the highest since September, guys. So there are much more stocks running in advance of the earnings and the FOMC meeting. And 66% of the stock market, guys, is above its 200-day moving average. Oh, so we just had a massive swing up in stocks ahead of this meeting, guys. And I just ain't a good look for me, man, because if you take a look at the actual meeting itself, they're pricing in interest rates of 25 basis points. There's a 2-day meeting starting tomorrow, Tuesday. The 2-day meeting will be followed by a press conference where Jerome Powell always runs his mouth, always has to say what he's thinking about, what he's planning on doing. He's expected to announce 25 basis points, but for the market, the way it's going right now, guys, I can see him hitting us with a 50 too. I ain't even gonna lie. I can see him hitting us with a 50. Let's see, 12-member committee is likely to tone down pace. A glimpse of which has been seen in December monetary policy, where the U.S. Central Bank has raised rates by 50 basis points, bring range to their right in line with the expectations, right? We'll see, man. 25, just I don't know. I back in the day, I actually did think that was going to happen, but with the market going the way it is, and it seems like inflation is actually starting to come back up a little bit now. If you look at gas prices, they're actually popping back up a little bit. I don't know. Powell might actually slap us, guys. I think Powell's going to slap us one good time. Got to get the market back into shape. But if you hear Jeremy Siegel talk to you about it, he says anything over 25 would be catastrophic. He says we have to get no more than 25 basis points. 50, I think, would be a disaster. Yeah. I mean, you want to be objective about it. Yeah, the market's going to react poorly to that. Calling it a disaster, though, and I don't know about all that. It's a bit hyperbolic, but says we got to get no more than 25 basis point. 50, I think, it would be a disaster. Although headline inflation is still well above the Fed's 2% target, Siegel previously pointed out the figure may be overstated due to the way certain inputs like home prices lag behind the official statistics. The Fed's rate hikes from last year have also yet to be fully felt in the economy, meaning inflation is likely falling much more rapidly than the Fed is expecting. Yeah, I mean, you hear Kathy talk about it as massive deflation coming. This is what Kathy Wood always says about it. But again, we've yet to see it. Inflation's still hanging out there around 7%, which people act like that's great now, but I mean, 7% is still way, way too high, guys. 3%, like 4% is like the highest you ever want it to go. But 7, and it's come down, and we're happy about 7. Nah, you can't have a functioning economy with 7% inflation, guys. That's just not going to happen. But let's continue where the video left off, shall we?
One way or another. The other thing that's really important is just how broad the rally has been. Value stocks are up this month, but so are growth stocks. The S&P is up almost 6% on the month. And the high beta stuff, this is stuff that will move more than the market does by definition of what high beta is. But it's really moving a lot more than the market. This is often technology stocks. You could see up 16%. The point is the breadth of the market is really, really wide, strong, no matter how you particularly advance it. One thing we could use is a few more new highs. We don't have a lot of them. On Friday, we only had a small handful of new highs. Caterpillar, GE, a bunch of the big global industrials, Borg Warner were breaking out, URI was breaking out.
There's like more big money retreating to safety right now. Another reason why guys just don't get married to this bull run. I've been saying it for weeks now. Don't get married to this bull run. You're already seeing like Ulta Beauty, Steel, Caterpillar, General Electric. These aren't growth stocks. Not by any stretch of the imagination. Wall Street's already making their move, planning to get up out of this. They already know. I think somebody knows what's coming. I'll just say that. That's just my opinion. It's all just my opinion. Nothing I say is financial advice either. Somebody knows something, and I think we're about to get a massive crash in the market. I do. I really, really do. Let's actually take a look at some of these earnings coming up, guys, because I got it pulled up right here. So this is for Tuesday. Tomorrow, we got UPS, General Motors, Exxon. Exxon's going to be really interesting. I think the market might actually be expecting too much out of Exxon's. You got McDonald's too, guys. That's really going to show you consumer spending, consumer trends and stuff. You got another Caterpillar, another defensive. See how they're doing. Really, UPS, Exxon, and McDonald's are like the biggest ones I really want to watch. See how the consumer is doing in the economy. That's just straight up, just like that. And then we got Waste Management. Well, that's not really the most interesting one. I know Apple's supposed to have theirs this week too. It must not be on this calendar. Eli Lilly, Bristol Myers, yeah. Harley Davidson, okay. That one might be interesting just for fun. I know, where's they ain't got them on here? Oh, well. There's big tech earnings this week too, guys. Google, Amazon, Apple, all those stocks are running. It's running way, way ahead of earnings, and it's just a bad sign if you ask me. And they're all at some point this week. I thought it'd be on this chart, but that was my fault for messing that up. And I think Intel stock gave us a little preview. Now, I don't own any Intel stock, so I'm just letting y'all know that. Intel stock gave us a preview of what's going to happen with these tech companies because their earnings was terrible. You can see the stock dropped like, what was it, 10, 15, 20% on the news of it. It was down. It was down bad. It dropped like 15% just off the earning news. I don't remember the data offhand, but it was bad. It was real bad. And yeah, guys, just been a quick little preview of the market and what to expect really, because I just expect more downside. So if you enjoyed this video, hit the like button, hit the subscribe button, and I'll see you guys in the next one. I'm out.